Happy New Year, everyone. Brenna Baucum, Collective Wealth Planning. January is often framed as a season of fresh starts, a time where we look ahead and imagine what we want the year to hold and what our intentions are for our work, our families, our health, and our finances in some cases. And speaking of finances, this is a time when we are absolutely flooded with predictions, market outlooks, economic forecasts, confident headlines telling us what's coming next and what we should do about it. That's why I found this recent New York Times article especially grounding. Rather than pretending to know where the markets are headed, the author took a step back and acknowledged something that doesn't get said often enough. No one actually knows what the short term holds. Wall Street forecasts year after year tend to be wrong, sometimes wildly so. And yet, this ritual of predictions continues because certainty is comforting even when it's misplaced. The article ultimately lands in a place that feels very aligned with how we approach financial planning here, and I wanted to read you one short passage directly because I think it captures this tension so well. It says, "Putting your money down without being absolutely certain of the outcome is inherently risky. But because the economy is likely to keep growing over the long run, eventually rewarding people who buy shares of profitable companies, it makes sense for those with long horizons to invest in the stock market." I appreciate that this doesn't sugarcoat reality. Investing is risky. Uncertainty is real. There are no guarantees. And yet, history shows us that patient, disciplined investors who stay focused on the long term have been rewarded, not because they predicted the future correctly, but because they stayed invested through it. This idea, tuning out the noise, resisting the urge to react to forecasts, and anchoring decisions in your time horizon, goals, values, that's something that we will continue to emphasize throughout the year. With that in mind, we have included several resources in this month's newsletter, as we do every month, each with a different aspect about thoughtful financial planning. So the first one is a Kiplinger article that we contributed to last month that explores how families can approach estate planning decisions, especially unequal inheritances, in a way that prioritizes clarity and relationships and not just the numbers. That's a tricky situation. Another article we shared our thoughts in is from AARP, and it offers a practical year-end checklist for retirees. I know you're watching this on January 1st, so you could also call it a New Year checklist, highlighting some small but meaningful steps that can add confidence and organization to your financial life. And then the third is a personal story from a widow that underscores just how challenging things can be when financial information isn't shared between partners, especially during moments of loss. That is so difficult. Each of these pieces reinforces a common theme. Good planning, it's not about perfection, it's not about prediction. It's about preparation, communication, and reducing unnecessary stress for yourself and for the people you love. In this month's newsletter, you're also going to find our quarterly collective update, which is a brief snapshot of what we've been up to over the past 3 months, including a feature we were honored to receive from Business Oregon. As always, if something in this newsletter sparks a question, or if the headlines are making things feel noisy and unsettling, we're here as a thought partner. Sometimes the most valuable step isn't changing your plan, but being reminded why you have one in the first place. Here's to a grounded and intentional start to 2026.